All right. Yay. Good, good, good. Welcome, welcome. Hi, Melissa, Parag, Ina. Oh my goodness, we have a CPA in the house. That deserves a thumbs up. Every small business needs a CPA, right? You got it. Beatrix, thank you for being here. Welcome to Boss Up. We will give some more time for others to join. And if you know anyone on your social media channels, you might want to direct message them if they did sign up and they might have forgot to join to hop on. Yay, Nunzio, how's it going? Joe, nice to meet you here in the Boss Up audio room. Listen, since I got a few minutes before I start, I got to tell you a story. Okay, so Deb Curtis is a Gen X-er and from the Midwest. Can you tell? I pronounce my A-E-I-O-U's, especially for all of you to understand me. If I talk too fast, say, girl, you got to slow down. I'm just a small town girl who lives in Wisconsin. Can y'all say that with me? Wisconsin. Let me tell you a few names in the state of Wisconsin, and then you tell me if you can spell them. Oconomowoc, Sheboygan, Kewaskum, Winneconne. Those are names of towns in Wisconsin. So anyhow, good to be here. I'm a Gen Xer, and before the top of the hour comes on, as other people are joining us, I thought it was interesting because I teach buyers that want to finance small businesses to take a look at all of the expenses that the current business owner has on their P&L statement or their tax returns, and to understand their marketing practices. So being a Gen Xer, I'm very close to the baby boomer generation. So I understand baby boomers who are typically selling these businesses, they don't want anything to do with technology. And I'm a Gen Xer, and I have to agree with them because thank God, Nunzio, I thought I started an hour earlier because it gave me time to get prepared with all of the technology. Now, Hopin is a great platform. I would highly recommend it for those of you who want to do an event. Hopin is great. But if you're going to buy a business, here is something to think about. If it's profitable and established and owned by a baby boomer and doing well based on baby boomer practices of what they call marketing, which a lot of times I'll ask the sellers, what's your marketing practice? And they're a baby boomer business owner for like 20 some years. And their comment is, I just pick up the phone and call, or my customers here, they're just loyal and they just show up, and word of mouth referrals. That's it. So what excites me about that, almost at the top of the hour here, is if you want to finance a business, you can bring in so much more revenue for those of you that are Gen Xers, millennials, all the generations that understand this technology and social media presence. These businesses don't have websites today, but yet they're established and profitable. So I always get excited when I work with buyers to see what kind of opportunities are just in the marketing aspect of acquiring these businesses. So remember that. All right. Thank you, Paul. He goes to market twice a week. I like that. Marketing is on fire. And baby boomers, they don't want a part of it. And these business owners today that are selling, and there's lots of profits, they'll gladly sell a profitable business to you and say, you can have that website responsibility and build out, or hire someone. That's probably what I'm going to do, is hire someone to help me. Okay, top of the hour. This is Deb Curtis, and I put all my social media channels at the top of the chat. Depending upon what platform is your preference, feel free to reach out and connect with me. The one that I'm on the most is LinkedIn. I post daily there. I have newsletters that I publish every Sunday. I stay very active, and a lot of our experts in the Boss Up community yesterday and today we're all engaged with one another, teaching each other to help teach you, the business buyers that are interested to acquire these businesses. So hop along with the ride as we stay focused on social media, teaching all of you. So connect with me and maybe send me a message that you saw me on the Boss Up 2023 event. So my name is Deb Curtis, but you'll see on a lot of my handles that I have the word JoJo in there, and just a little bit personal stuff about me. My middle name is Joe, and I am a Gen Xer and a young grandma. I have 4 baby grandchildren. I call them my COVID babies. They were born in 2020 and in 2022. And they keep me busy, and there's a lot of grandmas in our family with split families and such. So my nickname most of my life, and the grandchildren call me Grammy Jojo. So yes, you can call me Grammy Jojo. I appreciate that. Okay, so we're going to move on a little bit more here as to who I am and my professional background. I'm going to tell you all, I truly believe that my past career history in SBA lending and business acquisition financing has brought me to these days of my career. I know God blessed me having me work for big banks, regional banks, community banks, and non-bank lenders throughout my career, because I was in business banking, business lending, and did SBA loans. I had the opportunity to experience what it's like for a big bank to process SBA business acquisition transactions, and all of the other banks, big, medium, small, and non-banks, all a different process. So this slide, what I want you to take away with on this slide, if you go to market on your own, trying to find an SBA change of business ownership loan project that's going to be approved based on your strengths and weaknesses. Let's face it, we all have a weakness. Based on the seller's strengths and weaknesses, you could call all these different banks and get a different answer as to a yes or a no. So I call it the C of SBA lending. And it's very difficult as an individual to navigate the C's of SBA lenders. Here's why. The SBA, SOP, you'll hear that acronym. The SOP stands for Standard Operating Procedures. Every big bank, regional bank, community bank, non-bank lender must follow the SBA SOP regarding business acquisition financing. And if they don't follow the SOP, the bank stands risk to lose the 75% guarantee of your business acquisition loan project should it go bad. So we have the SBA SOP here. Now you may contact some banks, and guess what? They all have their credit policies. So you've got the SBA has a credit policy, and then a big bank has a credit policy. A community bank has their credit policy. And what I mean by that, they all have different thresholds, different credit appetites. For example, if you want to purchase finance an established, profitable restaurant, you could call a big bank today, one that I used to work for, and if I was receiving your call and you say, I want to purchase finance a restaurant, I'd say, hey, great, Nunzio, we can help you. We require 50% cash down on that restaurant acquisition, right? Okay, so maybe you go to a community bank and they just flat out say, no, we're not interested. We don't finance restaurants. You could call a regional bank and they'll say, we'll finance restaurants, but we require 30% down. Then you could call other banks or non-bank lenders and they tell you we can do the deal 10% down. So the method to this slide, ladies and gentlemen, is searching for SBA business acquisition loan financing on your own is going to be swimming through a sea of lenders giving you different answers, and how do you really know you have the best structure to be approved to buy that business? You just don't. So thankfully, my career, I've got to experience all this, and I have a network of lenders who are in my community, and quite frankly, many of them still work at these lenders where I used to work, and I know where to go. And these banks change their credit policies. They change their credit policies on the daily. Remember COVID? Hotel and restaurant financing, boom, shut down just like that out of nowhere. Commitments were pulled and lending changed, but there were some banks that still picked them up. So just remember, this is my professional background and why I bring intellectual property with knowledge of how all these banks work with the process and what their credit appetite is, so I can help expedite the process for you. So we'll move on to the next slide here. Now I'm going to talk to you about eligibility as a buyer. And this is just going back to the basics. But listen, you know, I think we are all creatures of habits, and going back to the basics is very important. You have to be, as a business buyer, completely ready to apply for financing. So therefore, I'm going to go through some top areas that you have to have in order and know that they're in order before you even go to a lender or come to me to find that lender for you that can do the financing of the business acquisition loan project. First and foremost, 5 C's of credit, personal credit history. If you're going to purchase finance an established profitable business, now remember, that established profitable business based on the IRS tax returns for SBA lending is going to determine if that business can afford your loan project payment. And the loan project payment is the business acquisition price. We're going to give you working capital to make sure you've got money in the bank to pay those short-term operating expenses out of the gates. We got to make sure, you know, what did the current owner officer salary, what was his salary expense, and are we going to transfer that to you? And then we calculate what that loan payment is going to be over a 10-year term, and that will determine if the business has enough historical cash flow to make the loan payment, right? So I want you all to know we're looking at the business first to make sure it can afford the SBA loan project payment. But you are going to be personally guaranteeing the loan, and we need to look at your character, and the 5 C's of credit helps the underwriter understand. So your personal credit history, make sure it's in order. I recommend my buyers, you can go online, you know, if you have a credit card or you bank at Chase, a lot of these companies today offer free credit scores. Always be on the lookout of what your credit score is. Always double check your credit bureau. You know, when's the last time that you actually looked at your credit bureau? Because there could be stuff on there that's not yours, or stuff that's paid and it's not reported paid. Be cognizant to look at that stuff before you apply for a business acquisition loan, because there's nothing worse than collecting everything. We find a business that qualifies for you. It's got the cash flow. It can make the loan payment. You tell me, Deb, I got great credit. I can't tell you how many times I hear that. My credit's excellent. And then we collect everything and my processing team pulls credit and boom, a 580 credit score. Wah, wah, wah. We just wasted everybody's time. So I know it sounds simple. Check it. Know it, understand it, and print out your most recent credit score so the lender that you work with or I have an idea that what you say is accurate. Trust but verify. Trust but verify. Character, that's the 5 C's of credit. Character means, does Deb Curtis have a ton of credit card debt with availability, but she doesn't max all her credit cards out? You could have a good credit score, everyone, but your credit cards could be maxed out. If you have credit cards on your personal credit report and maybe you've got 4 credit cards to the sum of, I don't know, 60,000. And trust me, that can happen. And they're all maxed out. What's the underwriter going to think when he looks at that? It might be a good score, but he's thinking, well, what kind of character do we have here? Someone that's just maxing out credit cards and now they want to buy a business with no collateral? Think about that. Get your credit card scores up and your credit card balances down. And what I mean by that is whatever the high credit limit is, a good rule of thumb is to try to keep that credit balance right around the 30% credit availability range, because that helps your score go up. So manage your personal debt. That's good character. And that leads into the capacity. As you see on the screen, capacity means, are you maxing out all your credit card debt? You know, you can have a great score, but if you're maxing everything out, you're going to spook the underwriters. And I'm going to tell you that. And you need to be honest with me and transparent. And if that's the case, maybe I look at your personal financial statement and you have some assets that you can sell and pay down that credit card debt before we even move to a business acquisition package, right? My job is to understand who you are, what you have, and what are we going to do to make it the best loan package for an SBA bank lender or non-bank lender to take on and approve, okay? And then, of course, capital, what does that mean? Your personal savings, right? Your personal savings. So if you come to me and say, I want to purchase finance a business, and all you have is $5,000 cash sitting in your personal checking account, you got to have a down payment, ladies and gentlemen, for SBA business acquisition loan financing. Now, there's another seminar I can do in the future regarding what is eligible sources for equity injection down payment for business acquisition loans. That's another hour to take on. Just know though, first and foremost, you got to have an equal portion of whatever the minimum required down payment of that business acquisition loan the underwriter is going to call for. So typically per SBA SOP, remember we mentioned this earlier, there's this credit box. SBA says 10%, but then you got the big banks, you got the regional banks, you got the community banks, you got the non-banks. I need to make a rap song about that. They all have their own credit policies. So remember the restaurants? SBA says we only require banks to put 10% down. But the big banks say we want 50%. The community bank says, well, we'll only do 30%. So remember that. But remember, cash on your personal financial statement is what matters most, okay? And then the last final C's we won't go into, but collateral, don't let that scare you, because SBA is all about the business that you're buying, the cash flow. Does collateral matter? And when I say collateral, if the business that's selling, sometimes they sell the commercial real estate with the business. Sometimes there's a lot of equipment with the manufacturing company. Maybe you have equity in your home, and we'll get to that on a future slide here. But collateral helps if the loan project is huge, large, and loan projects can start from 500,000 up to 5 million. We can do pari passus up to 7 million. That's another topic of discussion, but collateral is helpful if it's a larger transaction, but it's not necessary if there's other strengths in the overall business acquisition package. So remember this, people get confused. They believe that SBA requires collateral on every loan, and that is not the case. What is the case is that you must have proof that the business you're buying has sufficient cash flow historically, either over the last 3 IRS filed tax years, SBA policy, or based on the banks and the non-banks, big, small, medium. Some say, well, we only need 1 year to cash flow, the most recent year, and the current year P&L to cash flow. Some banks want all 3 years to cash flow. Some banks take all years and then combine them all and do an average. It's the sea of lenders. you're going to be swimming through a sea, and you're going to be underwater for a long time unless you work with somebody who's focused and has worked with all of these lenders and can get you through navigating the seas of the lenders. Okay? SBA is all about the cash flow of the business based on the IRS filed tax returns, not the business owner, the seller's spiral notebook of what he says really happened with the business, not based on the business broker's recast of the financial statements with all of these seller discretionary add backs. We don't look at the business broker's recast summary for loan approvals. We're looking at the tax returns. And here's a secret, ladies and gentlemen. A lot of baby boomers wanted to hide from the tax man. You can't have your cake and eat it a second time later, getting full price for your business. Why do you think 80% of the businesses out there today will be listed forever? Because they don't have enough income based on their IRS taxes to prove that the business can afford your SBA loan project, right? And I help you determine that. So I'll pause there, and we're going to move to the next slide to keep this 45-minute power hour going strong. Here we go, ladies and gentlemen. Understand this. Personal guarantee. What does that mean? Well, if you want to purchase finance an established profitable small business, yes, we as the SBA lenders are going to look and make sure that the business has got all the goods and the proven cash flow to make your SBA loan project payment. That's awesome. Think about it. You're going to transition into this business. It's already working. It's already established. It's got key employees. It's got loyal customers. You're looking at the taxes. This thing is cash flowing. Things are going great. And if you transition in, if it's not broke, why fix it? And you do well, that cash flow is going to make your SBA loan payment. But sometimes there may be a slow month, or maybe down the road, one of your top customers, decided to go elsewhere. These are what we will work together on as far as projections and assumptions. So when that risk comes to the forefront, the underwriter, it wants you to personally guarantee the loan. Whereas if something goes wrong and you don't have enough income from the business, you're still going to be responsible to find a way to make the payment on the SBA loan. Okay. Now, what is key there, as we talked on the slide prior, is your personal credit history. How much capacity of debt do you have out there as a buyer? Are you overloaded personally, or are you strong? Maybe you're married. Maybe you have a spouse that's bringing in additional income, or maybe you're buying an absentee-owned business that doesn't need you to be there, which you can keep and retain your W-2 income job, which is perfectly acceptable with the SBA. It just depends upon looking at the whole package. Does it make sense? Do the puzzle pieces match where they can come together? But the SBA SOP absolutely wants you to personally guarantee. I have that conversation right out of the gates with my business buyers. And I tell them, if this is an issue, our conversation's over, because we can't mitigate it. We cannot mitigate the SBA SOP. Otherwise, the SBA guarantee is gone. And no bank or non-bank lender is going to take that risk. Now, I want you all to understand, there's a lot of talk out there that, only business owners that are 20% or greater ownership proposed to buy this business have to personally guarantee. That's not true. It depends upon the banks and the non-bank lenders. I've seen some banks, just the 20% owners got to personally guarantee. I've seen some banks where maybe mom and dad, they helped the son with some down payment, but the son might have some old credit hiccups. And maybe the way that we structured to get the deal done, mom and dad will be like 5% owner, but the underwriter still wants them to guarantee because there's some credit hiccups with the son. So see how that works? Every transaction, every business acquisition package presents a different scenario, and there's that sea of lenders that I swim through to find out who's going to be the Venus flytrap and catch this one and fund it, right? So just know this though, personal guarantees for sure, if you're going to be proposed 20% owner or greater, is a must. These days, what I'm starting to see a lot of business buyers come to me and they don't have the down payment, but a huge private equity investor wants to give the cash into the deal, but the buyer that's going to personally guarantee has not a penny to put in it. And sometimes these underwriters are like, listen, if you don't put a penny into something and that something goes backwards, what's the first thing you're going to do if you didn't put any money into something? You're going to walk away. So let's be honest, ladies and gentlemen, whoever is going to put the majority cash in, there's going to be a really hard look by the SBA underwriters. How are they related to the owner operator? And why are they not wanting to be the personal guarantee on this SBA acquisition loan, right? So many underwriters want those investors. Somebody's got to cough up and offer their personal guarantee, because otherwise this guy's just going to walk away. Does that all make sense? Yeah. So, all right. And I see the questions rolling in the chat. I just want to get through my slide and then I will open it up for some questions. So the personal guarantee, we went through this slide. There's a personal financial statement that will be reviewed by the lenders, looking at your personal assets, your personal liabilities, and your personal household income. If you are married and you are applying for a SBA business acquisition loan, you have to list your spouse income, assets, and liabilities. That's an SBA SOP policy. I will click over to the next screen and we'll keep this time going. I won't touch real long on here, but I want you all to know in the room that the SBA is a government guaranteed loan program. So at this time, they do run a criminal background check on all of the proposed business owners and any key employees that may be tied to revenues of the business. For instance, you may be buying a business that's a HVAC company and they do plumbing repairs, right? But maybe you don't have the license to do the hands-on repair work. There's a key employee at the business that is licensed. That key employee is what we call a licensed plumber, meaning he or she is tied to the revenues. So the business owner has a criminal background check and the key employees will have a criminal background check. I will ask all of my buyers out of the gates when we're looking at deals and how we're going to structure them. I will remind them, before we go to the seller to say we need to make a key employee or the licensed plumber a key employee, we need to find out, are there any criminal, records, and what are they? Most often what happens, it's fine if it's old, like I've seen in the past, buyers that maybe had, I don't know, somebody smoked pot 20 years ago and it's on their record. Well, they got to write it down on the application. If you smoked weed 20 years ago, you got to write it down. Well, is an underwriter going to turn that down because you smoked weed 20 years ago, but you have no other records recently? You see what I'm saying? Now, if you have, a fraud case on you from 2 years ago, that's a different story. You know what the answer is going to be. So I will move on to the next slide. Keep this going. Professional resume. This is part of my eligibility process to see if you are eligible as a business buyer based on the business that you want to buy. So I have to tell you, the professional resume is exactly, this is what I coach my buyers, exactly like applying for your next job. What do we all do when we apply for our next job? We massage our professional resume to fit the bill. And when I say fit the bill, the first thing the underwriter is going to look at is, what does the business seller do today, his business operations and practices. He could be absentee or he could be full-time. And what does the buyer bring to the table on his resume to match what the seller does? We're trying to put those puzzle pieces together, right? So I'm the kind of lender, and not every lender is like this, the big banks, the small banks, the community banks, not every front-end lender will do this kind of stuff. I call them transactional, where there are lenders out there like me that's more solutions-based. So if I get a resume, I tell my buyers out of the gates, I'm going to review it, and based on the business that we land on, I may have you revise that resume to match the business that you want to acquire. For instance, we've been talking about the restaurant business. A lot of lenders want buyers of restaurants specifically to have at least 2 years direct industry experience in restaurants, because restaurants can be a beast. They can be very profitable if we got the right owners, and they can fail very fast if we don't have the right owners. So we're looking at direct restaurant experience. And I think of myself, I told you all I'm the Gen Xer, and I tell this story with my buyers that call me. If I was going to buy a restaurant, if you looked at my resume today, good Lord, it's long because I've been around a while, but if you looked at it today, you wouldn't see restaurant experience. So therefore, if I handed in my resume today to buy a restaurant business, I'd be turned down. But in my younger days, for about 7 years, I worked at Chi-Chi's Mexican Restaurant. Anybody remember that old franchise? Good margaritas, 2 for Tuesday, salt on the rim, chips and con queso. God, it was so good. I worked there for 8 years. And I was a waitress, a server. We were called waitresses back then. I also supervised a small team of people, other servers. I worked in the back kitchen. I helped with inventory, tracking all of that. And that was like, good Lord, a long time ago. So if that's you and you're buying this restaurant, I'm going to say, listen, Deb, you got to pull up that restaurant experience on your resume. I know you've worked for banks and you understand financials and you know SBA lending and you know how business operations are, but that SBA underwriter is going to want to see that restaurant experience. So I'm going to coach you to bring it up, right? So I will help you with the resume process because I'm solutions focused versus you just give me a resume and I slap it to the underwriter and hope it passes the gates of approval. That happens out there. You don't want that to happen to you. All right, moving on to the next slide. Number 7 and only 10 slides, so we're almost at the home run here, folks. Business acquisition SBA loan consultant. That's who I am. That's what I truly believe I've been born to do. And I didn't really know this until I went through the last 20 years of my career working for all of these different banks. I do want to share with all of you in the room today, if you call an SBA lender, there's a lot of good ones out there, but there's a lot of young ones out there. This is an industry that a lot of great SBA lenders from over the years have either retired or retired early because 2020 and 2021 was chaos for SBA lenders. We worked 7 days a week with the stimulus packages, the PPP, the EIDLs. And then we wanted to help every small business owner get those loans or an SBA 7A loan because the fee was waived, because your first 6 payments were taken care of. There was massive business in 2020 and 2021 because of the SBA stimulus packages. Those good lenders that have been around a long time, many of them have exited. So what does that mean? And this is happening, I think, across the board in a lot of industries. We're trying to train up the younger generation to understand SBA lending. You could call an SBA lender at US Bank, for example, and it might be a very nice gentleman, a young gentleman that's been on the job for a year or two, and does a jack of all trades SBA lending. It might be an SBA lender that does business debt consolidations, startups. Startups are hard to get done, but he's taking those requests. He's taking requests for working capital. He's taking requests for business owners that want to buy a business. He's taking requests for business acquisitions. That's what I call an SBA lender, jack of all trades, with no focus in one arena. I used to be that girl, and I ran around like a chicken with my head cut off. And the business brokers that I worked with that would refer buyers to me were all over me because they're time-sensitive transactions. And I realized over the last few years, I can't be a jack of all trades SBA lending. I have to focus only on business acquisition transactions because they're so time-sensitive. So when I worked with lenders, let me tell you, I told you my nickname is JoJo. I go by Deb or JoJo. Those business brokers, they were all over me, and they call me names that I shouldn't even mention on this webinar. They are hungry to push to get their listings sold. So they pushed hard on me, but I was so busy doing everything. It was so hard to keep up. That's why I now represent me alone, swimming in the sea of SBA lenders, representing you, the buyer that wants to do the financing, to find the bank or non-bank lender that will offer the best loan structure to you that makes the most sense to ensure your business is successful at closing into the first 3 to 6 months to a year, where you come back to me a year or two later and saying, Deb, I want to buy another business. And yes, that does happen. So one thing I do want to share with you, many business brokers out there have their own preferred lenders that they work with in-house. And what I mean by that is you're looking at businesses and you want to buy one that a business broker has for sale. That's great. Then he tells you, well, this business is SBA qualified. Here's a term sheet. Woohoo! Got a term sheet for you. It's all qualified. And you're thinking, damn, this is easy. You got an SBA lender. It's already approved. Just depends upon the experience of that SBA lender that dished out that term sheet. Back in the day when I worked for a big bank, I kid you not, this was years ago, there was a fella on my team that handed out term sheets and would bait and switch people. Sad story. He mucked up the underwriting system. He would bring in deals. He didn't know how to spread financials. He didn't know how to qualify. He was young. I can't blame him. Nobody really trained him. And we're seeing more of that today, where SBA lenders, banks and non-banks are hiring young people just to go find a deal and then slap it against the wall and see if it sticks and makes loan approval. What happens with that? It backs up the pipeline. It backs up the underwriters. It backs up everybody. It turns into a royal mess. You end up paying for business valuations. You end up paying for stuff, and your loan never had a shot from the get-go. So moral of my story is, based on my experience over the years, keep an arm's distance from the business broker selling the business and recommending you to their lender. And the reason why I say that is obviously what we just discussed, but the SBA lender is going to pay the business broker a referral fee for getting that loan done. And it's a percentage of your loan project amount. And that's completely fair with the SBA. In fact, that's how I get paid. When I package up business buyer deals, the way I get paid is protecting you, keeping you an arm's distance away from the broker, finding the best bank loan capital for you. And once your loan funds, I get paid a referral fee from the lender. That's perfectly fine with the SBA. You're going to sign an SBA form 159 indicating that I was paid. And I'm going to tell you that when we first connect with each other. There's nothing wrong with that. But if I were in your shoes, I would much rather work with the experienced professionals out there that do what I do and are able to farm out and swim in that sea of lenders for you and find the right lender that makes the most fit. When you work with somebody as the business broker that's getting paid to sell the business that you're buying, he's going to get a commission. That's why he's pushing hard. He works with a lender that's going to also pay him. That lender wants to get the deal done because he works for a bank or a non-bank lender, and the more he closes, the more money he makes. What part of the best interest in you is in that transaction? Not much. So I just want to share that with you. Be cognizant of where you go, because it's a sea of everything that's messy if you try to navigate it on your own. So this slide that I'm presenting right now, I just walked through what do I do. So as your loan consultant, first and foremost, I'm going to make sure that you are eligible as a business buyer. And I'm going to send you a short list, that personal financial statement, a resume. We're going to talk through, I'm going to educate you on options on how to improve your personal financial statement. It could be strong out of the gates. Maybe it's not strong out of the gates. I think forward. I had a gal once that acquired a staffing agency from me, and her loan got funded, but 2 other banks turned it down because she didn't have enough post-closing cash liquidity. Well, I saw that she owned 2 cars on her personal financial statement by the time I got the deal. I'm like, why do you have 2 cars? She went through a divorce, and the ex is gone. I'm not sure what the story was, but she owned the 2 vehicles, and one was a Jeep 4x4 Wrangler in the Minneapolis area. She was moving to this staffing agency to own it and operate and transition in. Profitable deal, but she didn't have enough post-closing cash liquidity. So I told her, take that freaking Jeep Wrangler. This was in 2021 when the used car market was hot. I said, take it to CarMax. I've done this before myself. Get a bid, see how much they'll buy that for, because she wasn't going to sell that Wrangler till she was settled in Florida, but she needed cash. So she listened to me. She sold that Jeep Wrangler at CarMax, got a bid for $35,000 because the used car market was hot. We updated her personal financial statement. Now she has post-closing cash liquidity, and the underwriter approved the deal, and she's running like a champ in Florida, managing this franchise staffing agency that was a resale. So remember I was talking about the transactional lenders and the solutions focused lenders. Sometimes those transactional lenders, like I mentioned, she looked at 2 other banks, and what's funny is the business broker, the lenders he worked with, said no. No, they said no. And guess what? I was 3rd on the totem pole. He trusted 2 other lenders before me. That shit happens out there, but that's okay. He came to me and I won the deal, and then I found a way to get it done. And that just made me realize I got to just be my own business loan consultant, because I've got enough knowledge and passion and excitement to help business buyers get deals done. There's so much that needs to be massaged, and these pieces, I love to put them together. And once they come together, you're on your way to financial freedom and business ownership and building up a retirement. And I'm going to teach you how to put in your business plan, how to succession plan, what's your contingency plan, what are you going to do one day if you got to sell that business. I'm pretty damn passionate about what I do, people, because I've seen small businesses fail years past. Why do we think 80% of the businesses out there don't sell? Because people weren't passionate enough out there to wake them up. Well, I'm here to wake you up and make you a success and make sure you come out on the other end of success. Okay, my preaching's done and my hair's getting messy. So, woohoo, I'm on fire, Nunzio. What's going on out there? All right, now, so this is my step, business buyer eligibility. Once I know you're eligible, then we're going to find a business. We're going to find seller side eligibility. Then I'm going to source my network. I've been doing this a freaking long time. I'm a Gen Xer. You can call me all the names you want, business brokers. You ain't got anything on me because I'm protecting my buyer. That's what matters foremost. Then we're going to deliver a full SBA proposal letter to you, and you're going to go out and put in your purchase agreement with the seller, with a flag up in the air that I'm on my way to business ownership. Then I'm going to help you collect a complete package. That's time consuming, but I know everything that you have to do to collect that complete owner loan package to make sure that we get that full final SBA credit approval. And for the record, all my previous banks and non-bank lenders that I work for, the underwriters love me. Why? Because I had full packages, I had answers to the questions that I know underwriters are going to be looking for, and I didn't waste their time. I didn't slap a deal like those young guys on the wall just to see if it works. I don't slow pipelines down. People want to work with me because I get your loan approved. I'm so passionate that it's my time now to take the years of experience that I've been doing to make you a business owner. And then when that final commitment letter comes in, you work with the SBA loan closer, and your loan, you'll clear conditions to close your loan within 30 to 45 days. And Deb Curtis is going to tell you everything that you need to have to make sure the conditions are ready so you can clear on a timely basis per the asset purchase agreement or stock purchase agreement closing date. Because that's what's important. I'm not that SBA lender taking all different kinds of credit requests. I'm not a jack of all trades. I'm a business acquisition loan consultant that knows SBA. Okay, let's move to the next slide. Am I done? Almost done. Oh, there she is. Success favors the ready mind and the willing heart. I believe this. You have to be ready, and I make you ready. And I swear to you, I believe the same with business owners that are looking to sell. They got to get their shit together and get ready. Are you with me? I mean, come on. And listen, don't waste your time looking through the sea of business listings because 80% of them don't even qualify for an SBA loan. So why do you need me? To weed through that shit. Wisconsin, right? Shite. Okay, so remember that. Next slide. There she is. I'm looking a little more calm there. Engaging an SBA business acquisition consultant will be the key to unlocking a faster, smoother path to business ownership. I've gone through hell with all those lenders, and I know a lot of my peers and my third-party partners that are on this webinar. They know it can be hell if you're working with the wrong SBA lender. It can take forever. So here's all my tags as far as, what do you call that, Nunzio? Handles, yeah, handles. See, Gen Xer, oh Lord. But connect with me. I'm very passionate, and now I'm going to kind of go through what some of the questions are here. You guys are the best. If you like this 45 minutes and you got something of value out there, please give me an emoji, give me a clap, give me something, because I need another cup of coffee. What are the typical fee structure for business loan consultants, advisors, and success? So that really depends on the business consultant. Some younger folks won't take a fee, but they have less experience and they get paid by the lender. Others might want $2,500. They might want $5,000, and it might be for a time period because the search for the right business takes time. When I worked for lenders, I had certain buyers that were in my queue, and it would take me and the buyer sometimes 12, sometimes 18. I had one guy, it took 24 months for him to finally find the right business listing that he wanted to acquire. Now, he went the private route. He didn't go through business brokers. He was picking up the phone and just calling business owners at random to have a cup of coffee and talk them into selling their business. But with that, a consultant like me, I'm on that journey with you, if it's going to take a year to 18 months. And, working for the bank, I had a paycheck. Well, now I'm on my own. So I have to get some kind of income for my time. And on average, $2,500 to $5,000 over a certain time period, 90 days, 120 days. It just depends upon the project. It's worth it because you're not the one that's doing the sea of navigating all the lenders. And then at the end, when your loan funds, as I mentioned earlier, the SBA lender will pay me for that complete full package that didn't require a ton of back and forth questions that just went to final approval. And success for me has, for the most part, and I have underwriters who would give a reference if anybody wanted one. My packages that I submit to lenders, typically, if everything told to me was true and accurate, and there were no skeletons in the closet that came out of the market, out of the deal at the final hour, typically I'm averaging about 95% approval rate from pre-qualification to final credit approval. And that's the truth. One thing a lot of my former supervisors at the banks that I worked at, they would always push me for more. We want more loans. We want more loans. And just push quantity, where I was more about quality. And I never was a top performer because of number of loans and hammering people to get things done. I just wasn't that type of an SBA business acquisition lender. I was more about quality and had more respect from the underwriters than anybody because my packages were easy to give an approval to. There wasn't much work to them. So I hope that answers your question. That's who I am. I protect you, the buyer. I'm not all about quality or quantity. I want loans. I want quality to make sure I can sleep at night knowing you're successful and you'll come back to me to buy another business or 2 or 3 or 4 over the next 5 years. And for the record, I have clients that come back to me and build up their small business portfolio when they have the right key employees in place to buy another one. It can happen. Let's see. Let me go up a little bit more. Am I doing okay, Nunzio, on time? Let's see what we got here. At what point do you want to be introduced into the process? That's a question from Eric. Right away. I say right away. This is a quote that's mine, a statement that I make. The one you have to trust in regards to business acquisition transactions is the lender and the consultant that prepares your package to give you the money, the capital, to fund the transaction. And the reason why I say that is SBA has a very strict policy that all of their lenders, their banks, their non-bank lenders must practice prudent lending. And we got to make sure, and it's my duty to make sure we're not putting you in a position that is not making any sense. So I say get introduced, work with me right away out of the gates. And we must, because it will help you navigate how much of a business you qualify for based on your personal financial statement. What are your strengths on your resume over the years? Did you work at Chi-Chi's 25 years ago and you want to buy a restaurant? We kind of have that conversation, right? That's a great question, Eric. So I like to start right away and get you rolling. So you're shaped up as best as possible. Anthony's got a great question here. Is a HELOC eligible down payment source? Very good question, Anthony, and very tricky depending upon what lender you're talking to, if they have the knowledge behind this. Yes, home equity can be eligible for down payment towards your business acquisition loan project. what is key here, when you apply for the loan with me, when you show me your personal financial statement, if I see you don't have a lot of cash in your personal savings, but you list your personal real estate and I see you have a lot of equity in your home, I'm going to ask questions. Where's your down payment going to come from? Well, Eric says, I have a ton of equity in my home. Can I use that? And the answer is yes, as long as there is a secondary source of household income, whether it's a spouse works and we'll need that spouse to guarantee with you some verifiable income. The SBA requires the monthly payment on the HELOC to be paid from secondary source of household income. That is what makes it eligible. And what's important is your SBA lender must write that up in the credit request package. Where is the down payment coming from? That is so important because that triggers whether there'll be a subordinate lien on the equity available or not. And another good webinar would be for me to talk about that, because sometimes business buyers own a home and they need to move to the state where they're buying the business. And yes, if there's equity in the home and they want to sell it to move to where the business is located, we can get around that based on how I structured that credit memo. I have to be very cognizant of explaining to the underwriter, this is what we're doing. Now, every lender may have different policies on their end, but there's the SBA policy. So great question. I hope that answered. Let's see here. Can you assume a seller's idle loan and package with a new SBA loan? Now, no. Well, it depends. Depends on if it's an asset purchase agreement or a stock purchase agreement. But if it's an asset purchase agreement, that idle loan has to be paid in full, and proof of it, because there's the SBA lien on all the business assets. Now, I believe if it's a stock purchase agreement, that idle loan can carry over then, because stock purchase agreements, you inherit the business current debt, and you also inherit the business cash liquidity and the business deposits and such. For the most part, asset purchase agreements are the most common transaction for SBA business acquisition lending. So the idle loan, if it's an asset purchase agreement, must be paid off before funding. That's a very great question. Is the only fee I collect from the bank at closing? The answer to that is no, and I'll tell you why. I do collect an engagement fee up front. It's reasonable and acceptable. And why, as I explained earlier, when I used to work for the banks, buyers can have me working on looking at all of these business listings for 12, 18 months, and it can be very, very time consuming. If I don't collect an engagement fee, I run the risk that a business broker may say, well, hey, Anthony, why don't you work with our SBA lender? It's already SBA approved. And I spent 18 months doing work for nothing. Of course, the business broker is going to really push you to work with their SBA lender because they get paid a fee. So I will collect a fee because of my intellectual property that I have earned through all of these years of my career. I am no rookie. I'm a Grammy JoJo. Let's remember that. And I'm a mama bear. And I'm going to protect you, Anthony, to make sure you've got your best interest for you personally and for the business at hand. Marlon has a great question here. Is there such a thing as being overqualified for an SBA loan? Yes, that can happen. The credit underwriter is going to look at your SBA personal financial statement. The SBA is meant to help people that want to buy businesses or small businesses, and they're doing that for people that have no other means to get the capital, right? So you could call your local bank for a business acquisition conventional loan, and more than likely they're going to say, not interested, because It's intangible assets. You're financing the business name. Yep, I'm about ready to get off here soon. You're financing the business name and other intangible assets. So we look at your personal financial statement, and if you have a ton of liquid cash, good rule of thumb is 2.5 times of what the sales price is. Underwriter may say, no, you've got another means to buy this business with. All right, I am going to get out of here because next up is Attorney Eric, who is going to be an awesome speaker. And for those of you that want to learn more, you know how to connect with me. And for everyone out there, I would always recommend to hire a business acquisition experienced attorney to protect you. So with that being said, Nunzio, I'm out of here. Is this time for me to go? I'm going to look in the chat. Thank you, everyone. I really enjoyed this 45 minutes, and I'll just keep my screen up and see if there's anything more. Yeah, thanks, Paul. Thanks, Matt. If anybody wants to talk more, just give me a holler. I love what I do. I'm obviously very passionate. But enjoy this next session and enjoy the rest of the day. I mean, thank you, Nunzio. Thank you, Patrick with Appletree, for sponsoring this event. And see you all on social media. Take care.